Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Today, we're demystifying how your federal income tax withholding is calculated right from your paycheck. It all starts with the Form W-4 you fill out when you get a new job. This form is the instruction manual you give to your employer, telling them how much money to set aside for taxes from each paycheck. Getting this form right is the single most important step in managing your tax withholding. It tells your employer about your filing status, like single or married filing jointly, whether you have multiple jobs, how many dependents you're claiming, and any other adjustments you want to make. Think of withholding as a pay-as-you-go system for your annual income tax bill. The goal is to get it as close to your actual tax liability as possible to avoid either a huge tax bill or a massive refund, which is essentially an interest-free loan to the government. So, how does your employer turn the W-4 information into a dollar amount? Most use a method outlined by the IRS called the percentage method, and it happens in a few key steps. First, they start with your gross wages for that specific pay period, whether it's weekly, bi-weekly, or monthly. Second, they adjust that wage amount based on the information from your W-4. The newer W-4 form is designed to be more accurate than the old one. For instance, any other income you listed in Step 4 is added to your wages for calculation purposes, and any deductions you claimed in Step 4b are used to lower your taxable income. Any pre-tax deductions, like your contributions to a 401k or certain health insurance premiums, are also subtracted at this stage. What's left is your adjusted, or taxable, wage for the pay period. Third, your employer consults the IRS percentage method tables found in Publication 15T. Based on your filing status and pay period, they subtract a specific dollar amount from your adjusted wage. This leaves the amount of income that is actually subject to the tax brackets. Fourth, this remaining income is then run through the tax brackets for that pay period. A portion is taxed at one rate, the next portion at a higher rate, and so on, to arrive at a tentative withholding amount. Fifth, the tax credits for any dependents you claimed in Step 3 of your W-4 are factored in. The total annual credit is divided by the number of pay periods in the year, and that amount is subtracted from the tax calculated so far. Finally, if you requested any extra withholding in Step 4C of your W-4, that flat dollar amount is added. The final result is the federal income tax withheld from your paycheck. While this sounds complicated, the good news is that payroll software does all this heavy lifting automatically. Your main job is to provide an accurate W-4 and to use the official IRS tax withholding estimator online at least once a year to make sure you are on track. We hope this breakdown helps you understand exactly what's happening behind the scenes with your pay stub. Thanks so much for watching. If you found this video helpful and want more simple explanations on personal finance topics, please hit the like button and be sure